Good morning, everyone. Hi. Okay, great. Thank you, Alex. Thank you for joining us this morning. Our topic today is diversifying, developing your investment footprint in 2023. So it is our greatest pleasure to have two real estate veterans to sharing the views and thoughts about the real estate market here in Hong Kong, and most importantly, in the region as well today. So before we commence, let me introduce our panel speakers. My name is Yuen. I'm the co-founder and managing partner of Alpha Grand Consulting Group. It's my great pleasure to co-moderate this morning's session with Keelan Chapman of ChapmanCraig Limited. Keelan and I also are co-chairs of the Financial Services Committee at ChapmanCraig.
Is this on? Oh, good morning, everyone. Great to see you all. Thank you very much for being with us this morning. It's my great pleasure to introduce our two panelists today. So to my right, we have Nigel Smith. Nigel has close to 40 years of industry experience in the real estate sector. He is the founder of Nigel Smith Associates. Nigel performs independent strategic advisory work in Asia, covering real estate investment, leasing, and development services to owners, investors, and developers, family offices, and corporations. Prior to founding his firm, Nigel was the managing director of Colliers and played senior membership roles in CBRE and JLL in Asia. This is actually a really great opportunity for me today and a special occasion because Nigel was actually my mentor 7 years ago through the Canadian Chamber. Nigel looks exactly the same, and I've got a lot more gray hair now. So it's an absolute pleasure to have Nigel with us today. And to Nigel's right, we have Patrick Wong. Patrick is the senior research analyst at Bloomberg. He is the team leader covering the Asia Pacific real estate section in the Bloomberg Intelligence Division. So quick round of applause for our panelists today. So we're going to get right into the thick of things, and I'm going to start with Nigel. Now that all the restrictions are gone in Hong Kong, I think I can say on behalf of everyone, hallelujah. So what is the future of the office space? And now that all the restrictions are done, will staff return back to the office? Will we see people from that left Hong Kong return to Hong Kong? Will our firms hiring again?
A very big question, but I'm excited to talk about it. I traveled for 3 months last year, and as many of you may also know, obviously masks went, which is obviously the final thing to go here, a long time ago. So it's lovely to be back to what feels like a normal working environment. But you know, the point I'm going to make throughout this presentation is going to be more about the new normal that we're really going into, because there's a spectrum of viewpoints in terms of the office space. Are we going back? Will they ever go back? No, they're never going to go back, and so on and so forth. Look, it's always going to be binary. Some people are going to be right, some people are going to be, can't say, have a different view. Let's just call it that. But at the end of the day, for Asia, the future of the office is still there. Absolutely, 100%, I would almost say, but it will be in a new way. So actually that 100% is going to come down quite quickly because of the word flexibility. And as you asked about, the employee is going to be the prime focus, but hey, I thought the employee was always the prime focus, wasn't it? Employers. So we've got to think of different ways to be a little bit more creative, because the employee is looking for, they're more curious, I think, about the office space and what they want to get out of the office space. Okay, let's step back and just look at where we are in Hong Kong, because I've been here for quite a while, as you said, gray hair and all. So where are we? Now, most of the real estate houses are just talking about pre-COVID numbers, but actually the fall that I'm about to talk about is bigger if you go back to the peak of the last cycle, which was at the end of 2018. But pre-COVID, office rents are down 23%. That's a pretty big number, I suppose so. But here's the real kicker, which doesn't sound so good for Hong Kong, but actually is quite normal for the rest of the world, is we're hitting a 15% vacancy rate for the grade A office sector. So that's an all-time high. Now, just by way of comparison, it's about 8% in Central. So most of this new supply, vacancy, whatever, is in decentralized areas. Now, let's come back to the point about the employee. What are they going to want over in Kwun Tong? You know, what are they going to want over at CBD, 2 in Kowloon Bay or Cheung Sha, right? So we've got to think about this agility of the staff. So what are they going to do? Well, I do believe they're going to come back to the workplace. I don't think they really left. I think there was a concern about working with other people because of just health and safety, and that's okay. I don't think there was anything unusual about that. Maybe we did a better job than elsewhere in the world. So let's move on from that point. But they never really left the office space. They wanted to come back to the office. And what we noticed was in the last few years is how office spaces have been changing towards what the employees want. So they've become a bit cooler and funky. And if anybody went round our Collier's office we did maybe 6 years ago, we even had swings in the office. I think you remember those. Yeah, very interesting, very cool, colorful, all these sort of things. Blue color, of course, because that's Collier's logo. So I think a lot has been done inside the office space, but let's focus back on the office owners, which will really be a concern for those either in the grade A minus market. So we now start to look at how we layer out the different pieces of the grade A office, and particularly the grade B and the grade C, which is where the biggest concern will be. Now, look, it's interesting. For the last 33 years since I've been in Hong Kong, the grade A office market is stuck at around 80 million square foot. It's never really gone higher or much lower. So that means there's quite a big fall off of buildings that go into grade B and grade C, which means that landlords aren't tending to keep their buildings in a good condition, Now, the latest buzz acronym is ESG, right? Does everybody know what ESG stands for, right? Keelan, come on, buddy.
You put me on the
because I don't know. No,
environment, society, and governance.
Correct, exactly, or social, it doesn't really matter, which comes under sustainability. So what are landlords doing about becoming more sustainable? Or under those three words, forget governance for the time being, because that will be driven by headquarters, and some of the headquartered companies will be forcing change. That can be a good thing. But the social piece, diversity and inclusion is included inside of that. And I think a lot more still needs to be done by the landlords, which is my point, if they want to hold their office rents. So they're down 23% overall. It's probably nearer 30% since the last peak. So that is a big number. But I think there's a lot more that can be done. And some landlords do it. That's great, that they're investing in their buildings. But others are going to lose out. Now, real estate at the end of the day, some people say location, location, location. But to me, that's still district, street, floor. So you can still divide that little number up. But yeah, they're right. So the buildings in central, and as I said, vacancy is here at about 8%, not too bad. Hong Kong land is a benchmark, is probably nearer 3 to 5%, a little wide because I don't know the exact number. But it's some of those fringe buildings that are going to be a concern because they're just not doing enough. So where are we going? And I'll call it for the last statement. We're going towards, and if you understand it, hoteling. So office buildings need to become more like offering a hotel service. I didn't mention concierge because that's been used before, but that is obviously part of it. Yes, it means more facilities. It doesn't mean hotel rooms. Okay, people. But what it does mean is more facilities that companies can use within the building because they don't necessarily want to go out, but they will go out to other restaurants. So other facilities within the district will also be important. I'll pause there because I've talked far too long. But
I can add a little bit.
Yeah, go for it.
On your point, I think, Nigel make all good points here, right? And from Bloomberg perspective, we also did a survey actually earlier in London about how the return of office, right? And interestingly, when we do the survey to those employees we just mentioned, right? It's not just Bloomberg, I mean for everywhere in London, especially those in the major corporate, right? We found out that majority of them, they ask for, right, when we ask them, right, whether now is working just like 3 days a week in the office, are they willing to like going back 5 days, right? What they say is, okay, I can go back 5 days a week in the office, provided that you increase my salary by double digit. Wow. And then, wow, it's a big thing, right? Of course, it's London, right? It's not a totally apply to Hong Kong because it's different cases, right? You know, London is a bit, when we do the transportation, it could be quite long hours, 2 hours or so maybe different, right? So yeah, Hong Kong could be a bit different, but we also need to think about like how about the new generations, right? They may be like more willing to be a little bit flexible. Like for myself, I'm very enjoy working in the office every day, meeting people. But some other like new generation, what we found out is that they also like they are willing to have a little bit more flexible, right? So it's something that maybe the corporate need to figure out. Like from my company perspective, we offer like 3 days a week, right, working in the office. So far so good, and then we are not going to remove this. But the good thing for my company is that we still have our own desk, right? Which is quite luxury, I would say, right? When we have like lots of others already doing a little bit more flexible, hot desk, whatever, right? So,
well, I heard a phrase the other day to that point, which was the desk is a destination. I like that because it is, right? But we took them away a few years back, but you still get your desk. Well, you need one,
yeah.
right?
Patrick, with a compliment to Bloomberg, I still miss all the potato chips and the free drinks.
Will they come back?
Around
Yeah, all come back, yeah.
Yeah, and a very nice fish tank.
Yeah.
Still there?
Yeah, this is really big one. I think for us is we still keep expanding quite a bit here, and definitely is something that I think for office when we're going to return, I think definitely is also one thing for us to like keep the employee here, right? That is very important one that when we figure out. So that's also important.
Yeah, but you know, we're talking all about this optimistic outlook, but how about interest rate? When we look at US FOMC, it appears they're still pretty hawkish, saying that another rate hike, not stopping till like 6%. What do you think about, you know, given US dollar and Hong Kong dollar are pretty much pegged currency, would that affect our property price here?
Yeah, very good question, because for the interest rate outlook, I think going back to June last year, when our Bloomberg intelligence and also our economists also make the forecast that this year we could see 5% Fed fund rate. At that time, I remember the Fed fund rate still below 2%. And then people already, wow, this is possible, 5%. And this will be a big impact on the property sector, right? Especially like Hong Kong, right? So we also, at that time, we also adjust our forecast that we think the property price in Hong Kong could down like 10-15% from that point. And it really happened, right? You see last year, we see the property price down almost 15%. And then luckily, I think now we see some recovery in terms of the reopening, right? And that is a good thing. But the challenge, I think what we also see at this moment is about like the US market. We need to follow anyway, right? So definitely it's definitely a headwinds for us this year. And the forecast now, I think for the consensus, if you look at the futures trading, we see potentially the Fed fund rate could go to 5.5%, right, in the middle of this year. Of course, it's not talking to be really aggressive rate high compared to last year, right? But the challenge is that for Hong Kong perspective, we also see the possibility for us to follow a little bit closer, right, to US. It depends on the aggregate balance we see from the HKMA, you see that. So it's also shrinking quite a bit over the past couple of months. So that is also a headwinds for us. And the challenge, I think, for now is that the inflation thing in US, whatever, I think we can't control. But the good things for we see last year is that the prime lending rate in Hong Kong, like for the major banks, it just raised 62.5 basis points, something like that. That is not really huge when compared with what we see in the US. I think part of the reason is also about China, that we see the easing quite a bit since November last year. And this also bring up some support to the Hong Kong market as well. So definitely we could see that thing could persist for a little bit longer time. So hopefully that will also help out for the overall market. But for the interest rate outlook, I think that definitely for Hong Kong, because of the floating rate, that for mortgage, definitely for the mass market, it could be quite rate sensitive. And short term, I think the mass market, we see some recovery in terms of volume and also in terms of the rents as well. Price also going up a little bit, which is great. But yeah, definitely is still not really. I think this could still be a bit challenging if the rate high still, we could see another 75 basis points from the US point of view going up over the next couple of months. If that happens, then Hong Kong will also be suffer a little bit if we could see the mortgage rate going to 4% or something.
Well, can I jump in then on the two fronts? I'll come back to residential if that's okay with you, but just from a commercial real estate perspective in terms of the interest rates and your question. Look, it's interesting, last year before interest rates started to really move, 62% of all transactions were by funds, you know, and they're very sensitive towards the interest rate movements. Now they're all sort of mouth open going, what do we do next? The year before that, it was predominantly the local investors because, you know, they just saw things being cheap. It's interesting how they operate. They don't necessarily look at the interest rates. Overall, what's of concern is the stability, and the peg is not going to go anywhere, my understanding at least, which is a good thing. So some of the risk is being taken out of the market. But from a commercial perspective, this year may go back to seeing local investors moving back in as the funds can't make those numbers work as those interest rates are going up. Look, I think if we look at investment as a group, what's been happening over the last few years, well, industrial has been the golden child and performed extremely well, both from a capital value and also rental value perspective. And that will still continue to go up, but at lesser rates this year. It's the largest sector in the real estate market, about 270 million square foot overall versus the 80 million that I mentioned earlier of grade A office space. So it's a big sector, and data centers, cold storage, logistics, et cetera, have been moving in. And I understand that, you know, containers and air freight is starting to come back, so that should hold. Retail, I think, is the biggest opportunity personally, but that goes into another area which we can talk about perhaps a little bit later on, because you know, capital values are so low, and then the interest rate doesn't matter so much. You can turn those around, reposition them, but we can talk more about that later. The office sector, as I said, is my biggest concern, but it's all about repositioning. And I think it'll be done more by the local players, possibly with foreign funds, but they're taking the risk at a local level. So we'll see how that pans out commercially. Residential, right, the big question, and you were going to ask me this, so can I ask my own question? Is that okay?
Please go ahead.
Thank you. I'll ask my own question.
You're making my life very easy right now.
Exactly, just sits back and just don't fall asleep on me. I might come back with a trick question. So has the market bottomed out? Let's just talk about that quickly. Well, no, I think there was some exuberant optimism. And I quote that from a friend of mine who's far smarter than me and very, very much research focused. There was exuberant optimism in the beginning of this year. The borders opened and we thought there would be a flood of mainland money. And yes, some of it came down. There were also some sales by mainlanders, interesting. But it did start the market moving. Now we have to be very careful here. The residential market's extremely, well, I call it stratified. It has many layers to it. So what you were just talking about was the mass residential market at the end, right? And I think actually that will soften further. So we haven't seen the bottom there yet. And it's mostly because of oversupply, albeit that the population is growing. So oversupply. So if you're going to be looking at a residential opportunity in mass residential, follow Rail Plus. You know, get as close as you can to a node, preferably an MTR station, and you should be fine. But I think towards the end of the year, but the luxury market, which is technically over 1,300 and something square foot, is operating slightly differently. I think that will bottom out towards the middle of the year. Now, interest rates are going to affect that more because of the lump sums are bigger, but it won't slow it down. I think with the new government initiatives, we are seeing foreigners coming back in to live at all levels, CEO as well as junior people. So I think that residential, luxury residential, and particularly the second-hand, will start to turn in the middle of this year and not be so affected by interest rates because people will tend to take a longer term view, and over the longer term, real estate does well.
Thank you.
Did that answer your question?
Yes, you did.
Good man.
Yeah. Nigel actually brought a very good point, China. So I'm sure everybody aware that in the past 2-3 years, there has been a liquidity crunch, basically driven by all these Chinese developers. Patrick, do you think that would affect Hong Kong's, again, you know, real estate is a general term, commercial, luxurious residential or mass residential? What do you think about the appetite and the outlook?
Yeah, thanks, Carol. I think very good question because for China, as I also mentioned earlier, I think definitely big connection here. So when China property sector suffering, and especially we also see some mainland developers, they also have the properties development here, not just mention Evergrande, right? We also have a couple of the other country garden, right? So they all have projects here, right? And also see the impact, right? Because people are concerned about the delivery of the projects. And definitely, I think it also makes some challenge going to last year. And good thing is that I think for now on is versus the day before, right? A couple of years ago, when China developers are doing really well in terms of the sales momentum in mainland China, they also expand quite a bit in Hong Kong as well. So when we see the land tender over the past couple of years, like back to like 5 years, 6 years ago, we see more bidders, right, from different aspects. And mainland Chinese, I think those developers, they also actively acquiring projects here in Hong Kong. But for now, I think when we see the overall situation, honestly, that is also changed quite a bit. We see the land bidding is like just 2 or 3 or 4 bidders, that's all. Versus now, I think the market also see some concern in terms of like the commercial project, right? We just mentioned earlier before this is like Sun Hong Kai acquired a project in Mong Kok, right? Like 3,100 Hong Kong dollar per square foot, right? It's crazy low, right? When we think about right here, we see the car park building, right? That is before that is from just acquired by Henderson Land back to 5 years ago at 50,000 Hong Kong per square foot. So you see the big difference in terms of land prices. So I think for developer perspective for Hong Kong one, because they are cash rich relatively, some of them are lack cash. We see like CK or Silo Land. So it's quick for them to acquire more projects. This upcoming opportunity when those Chinese have problems, when Hong Kong, I think, is also a good opportunity for them to expand further, especially for some land acquisition. And distressed asset, I think it's also possible to see more transaction. Compared with before, I think because a lot the concern about reopening, lots of uncertainty. So even some distressed asset, we don't see much buyers. But when now we also, yes, maybe interest rates still are uncertainty, but when we see the rental growth momentum for some of them, especially like retail asset, it could be a possibility to see attract some more solid demand from the local. So those distressed assets from those Chinese developers here, I think it's possible to see more demand.
I actually wanted to talk about retail, but we'll return to that in a moment because you gave a great segue into China. So, you know, Nigel was talking about, you know, ESG being a very popular word in Hong Kong. Another popular word is GBA in Hong Kong. Talk about the GBA a lot. So Nigel, what is the future of Hong Kong and real estate in the GBA area, and what should people in Hong Kong be doing in order to look for opportunities in the GBA area?
Well, I think, first of all, you have to look at a time frame and realize it's going to take 20 years from probably now for anything to really materialize. So just be prepared for that. Maybe I'm being extreme, but things take time. And the example I love to give is Canary Wharf, which took 20 years to get its first front office bank, right? So it took a long time. So let's not panic, but really it's about knowledge and network. You're not going to get into the GBA without either. So you've got to start researching it and start to build up your network. Now, some of the bigger players have been going in, particularly around logistics, but that area has become oversupplied. So that's not necessarily the right thing to do. What is the right thing to do? Big residential, because that's what the local governments and basically where they're going to get their tax dollars from, I believe, and jump in, is what's going to drive. So as an individual, all you're going to be left with is buying a flat per se, above a rail plus, perhaps, as I said earlier about Hong Kong, within the GBA. I think very few people really could rattle off the 9 provinces that are up there, right? I certainly can't. We certainly know Hong Kong, Macao is making it 11, but it's really hard to look at what those opportunities are. So the first thing has to be, right, across the border, Shenzhen, IT, what is the Hong Kong Science and Technology Parks doing about that? How can we get involved? Number one. Number two, Guangzhou, how is that going to be a hub for this region together with Dongguan in terms of manufacturing and then commerce generally? Professional services, where are they going to start coming from? Well, I think at the end of the day, Hong Kong's role for the GBA will be the professional services, perhaps some financial services, although not so much competition, but there is also obviously Shanghai that's being developed very fast. So I think, first of all, we've got to look at where is the infrastructure going. That's number one. Look at a time frame, build up your knowledge and think about who your networks are. If you're a bigger investor, yes, you can get in with some of the local governments or local developers. If you're not, then you're going to be really relying on the overall build quality. And then secondly, the infrastructure in terms of clinics and schooling, depending on what age group you're in, where all of those are, because they are far behind Hong Kong just in those two main sectors. That's clinics or medical and schooling. And that needs to come up in terms of infrastructure far quicker than it probably is already doing.
That's true. I think I totally agree with Nigel. And I think the long-term metropolis is the very important point for us to take a look, because now of course, we also have lots of established development here, Hong Kong Island or even Kowloon. When I talk about West Kowloon, Kai Tak, right? It's fine, right? But we look at the further development of the infrastructure, our metro, the MTR network. So definitely we see that more opportunities will going out over the next couple of years. It's a bigger picture now, right? When, especially while we talk about GBA, the connection with Shenzhen and also other cities, then definitely is something that we think potential opportunities is not just here, right? It could be much bigger, right?
Great. So, Patrick, I'm sure you're aware that Keelan and I just returned from Singapore, where many of us here attend a conference in Singapore and met a few Canadian diplomats and business corporations. So I'm sure Bloomberg has a lot of headlines about Singapore real estate, hottest in the world, and a lot of money flow into the country. What do you think about the property outlook, Hong Kong versus Singapore, and whether our government has been doing a lot of supports in terms of the recent announced budgets and policies?
Yeah, good question. Because for this Singapore versus Hong Kong, I think it's a hot topic, right? And for myself, I also travel to Singapore from time to time, and then I see the changes over the past couple of years. Of course, I can't travel quite a bit because of the COVID before, but like last time I traveled there in November, I think for Singapore perspective, we see more people, and then basically it's a big change in terms of the like housing market, for example. I think they are doing really crazy in terms of rents, right? The housing rents is going up 40, 50%. And some of colleagues told me that, I think, oh, well, and they asked, oh, so like how next year we raise the salary, right, Patrick? Why is too high the rents? Because lots of us are kind of expat there, right? And we won't own our houses, and also the stamp duty there for Singapore, I think is also really crazy. So they won't buy their own properties, right? So that's the problem when they find out they work there. Especially I also see some of my friends, they travel in the past, they work in Hong Kong and then they move to Singapore because of reopening, because of like the companies, like move the headquarters there for some tax saving. So, but I think for now, this year it could be different because we see Hong Kong now is reopened. And we just talked about GBA, right? And for GBA perspective, I think Hong Kong have a unique edge, right, versus Singapore. So this is also a very important thing to attract more talents coming back, right? And from my perspective, I think, of course, there is also some people concerned about the potential risk about like the geopolitical risk, but in any case, I think for Hong Kong perspective, we see the growth momentum there. And we come from a very low base. And so that is also important. And from the housing rental perspective, I think, yes, still expensive, of course, for Hong Kong, right? But when we see Singapore also going up really crazy, right? 40, 50%. And then our forecast is that for this year is another 15% increase. So this is really high, right? So from that perspective, I think for Hong Kong, we see the edge from different aspects. And from that front, I fully believe that for Hong Kong, we still see a pretty good outlook in that front when we versus Singapore.
Do you want me to say more positive things about Hong Kong? Okay, I'll say more positive things about Hong Kong. Yeah, that's right. Whoop, whoop. You didn't say no. No, I'm kidding. Gosh, I've been here for 30 years, so of course this is home. But I think we must never use the everyone or all words in our conversations, that everyone's leaving. All my friends are leaving to Singapore, because they didn't. That's number one. Number two is not everybody's going to be coming back either. Out of some of my friends who did relocate down there, one has said, yes, he would prefer to come back. One says he can't come back, but he likes coming back as a tourist. So everybody's different. I think that's the first point. I spoke to somebody last week who runs his business from Singapore, and whilst he was talking about, yeah, they would have a champagne party if their rent only went up by 40%. That's a celebration, wow. But he said overall it was still cheaper for him than renting the equivalent in Hong Kong. Now, you have to, again, dissect that. The equivalent, if he's in a house down there, well, hello, of course it's more expensive here. We don't have many houses, so you've got to be very careful. But I think, you know, the phrase, if you want to do business in China, you've got to be in Hong Kong, still works for me personally. I think what we do need is more support on the GBA from Beijing, and a real push in that direction. I think that will start to come. But in terms of, you're right, as a cost base, if companies, I sort of picked up on this earlier, look at cost as an issue with regard to, say, just interest rates as well, then rents are coming down here. I talked about those numbers. Retail rents overall since the last peak in retail are down 70%. It's a massive number. So actually it's looking quite attractive for some companies if they can reposition themselves. Of course, residential comes into it, but office space is becoming extremely attractive here. And yes, you might need to go to a decentralized location, but the facilities over in Kwun Tong are actually very, very good. Chung Shawan is changing. If anybody knows D2, it's a fantastic retail project. So I think things are happening here. We just haven't seen it. You know, what I do here is, you know, the beauty of Hong Kong over the last 3 years, it's a bigger city, you know, 7 going to 8 million people. So we're bigger financially, and we're bigger as a population and as a landmass. I think those are some of the key points.
And I think the latest budget, right? We also mentioned about I think for stamp duty cuts a little bit for first-time buyer, which is good. And bigger thing is that I think before the budget, we also have the policy addressed, and then about the overseas talents coming here and then can get the tax rebate when they buy properties. So I think it's a right position to do it, right? Versus like, I think for Singapore, they even like latest budget in Singapore, they even further increase the stamp duty, especially for luxury apartments. So I think you see the difference, right, for Hong Kong, Singapore in this perspective.
Yeah, I think Hong Kong could do more, obviously. Let's all agree that as well, perhaps. But I think, yeah, we're in a good place.
Well, I have one more question, and I'm cognizant of time, so just keep this really short. The retail sector in Hong Kong was struggling even before COVID, and then continued its struggles during COVID. Now that we're in the post-COVID era in Hong Kong and the borders have opened up, how do you see the future of the retail space in Hong Kong? And what will the role of the mainland Chinese buyer coming to Hong Kong be in the coming?
Okay, well, very quickly, I think F&B is already coming back. Rents are low enough for them to survive for more than 6 months. The question is, will we get enough new concepts coming through to support the desire of the population, both local, international, mainland? Right, so there's 3 sort of groups, but you know the restaurants, it's hard to get into now, so that's starting to move. Rents need to stay at a sort of a flat level, and the houses are saying between 5 and 10% up for retail as a whole, as an overall sector for this year. But the retail sector, you're right, you have to look at it. I mean, the Landmark will do fine because of the mainland and others coming down to Hong Kong to buy products here. But local consumables will be okay. But it's the middle group. So some of the non-so-luxury jewelry or that group, perhaps electronics is not going to fare so well, but it will come back over time. The final point is, well, where's it going to happen? I think mostly in the decentralized malls. From an investment perspective, that's where the action is going to be, is repositioning some decentralized malls.
For Bloomberg Intelligence, we did a forecast for this year. The Hong Kong retail sales is going up 27% year over year. And of course, it's a low base, right, last year maybe, but we see the growth momentum is there. And also the tourist arrival, we also see very strong growth this year, especially for the second half. And I think we see the pent-up demand, right, in terms of travel. And of course, for us, we also travel out, but we also see lots of mainland visitors will travel in, so which is a big support. And then upcoming, I think, like Rugby 7, hopefully will be a full house, I believe, right, versus what we see last time in November, right? So definitely, I think see the growth momentum is coming back, which is great. I mean, for retail, we need to see the strong rental growth. And when we have the concern about the interest rate outlook, whether investment demand will coming back, everything, I think definitely we need to see the strong rental growth to offset the interest rate increase. So definitely retail is the segment we should look at.
And am I right to say global retailers will see Asia as an opportunity if the US is going into recession and the difficulties in Europe? So global retailers see Asia as an opportunity? Yeah,
definitely. I think we see that they see the growth momentum here, and got a more expansion we could happen is for, I think, for Hong Kong as well. And for, I think for some luxury segment, like before that is because they can't travel, so it's all happening in mainland China. So I think that thing may shift a little bit, and then Hong Kong will benefit quite a lot on that one.
All right, normally we'd only allocate 5 minutes for questions, but this is real estate in Hong Kong, so there's always tons of questions. So we've allocated a little bit more time, so we're gonna put it out to the audience. Any questions in the crowd? So there's one for Mr. Shane Weir at the back. He was the quickest one to put his hand up.
You'd mentioned Singapore's crazy stamp duty as being one of the dampers on investment, or one of the investment considerations one must make in Singapore. Talk about crazy stamp duty. How do we get rid of that anchor that must be slowing people to get back into the market here? Why would we not immediately act? And secondly, how can we as a community, as a chamber, as individuals, as corporates, push the government to wake up and smell the roses? It's pretty obvious that would be huge in my view and in many others' view.
I can add a little bit is on the, I think last year we see the property price coming down, right, aggressively. So that's why you see Hong Kong, they relax a little bit on that front. And now is, if you look at like the home price index, it's going up from since end of last year, it's going up like 3-4%. And then this time the budget, I think, of course, we also did some work on the like first-time buyers, but for the overseas, for the expat, I think, yeah, they may still need to wait a little bit time until, right, where the prices could go down further, right? And then I guess they want to relax a bit further, but they also need to figure out like a better opportunity to do it. So if the interest rate is going up further, as what we foresee, then the price may go down again, right? And then possibly we could see that there's a good opportunity for the government to do it. So hopefully we could see in the second half. Especially, I think this a very important point is that I also mentioned about the land tender, the land results is not really good, which also impact on the government revenue quite a lot. So that is also a very important point, that if we have so many restrictions, then the developers won't bid at high prices, right? Yeah, that's the problem. And because of that, because they also own lots of luxury projects unsold, right? Still, you can see everywhere, right? So that is the main problem. I think the government may also consider as well. So I think it could happen.
That's right. Look, there's many levers that they can push and pull. The biggest worry is tax dollars. Not the biggest, sorry, a worry. But more importantly, housing getting too expensive for the younger gen. And that's what was the concern a few years back. And if they pull it off, pull some of the levers off too quickly, this could skyrocket, because we're driven primarily by sentiment and lack of supply in Hong Kong. I know there's an oversupply in some areas, but overall, Hong Kong's a very small land mass, and that's the problem. And they're just very worried about it exploding. So it's going to take a bit of time. They'll do it quite slowly and ease off. But yeah, I don't see some of those levers coming off in the next couple of years as an extreme.
Thank you. I'd like to bring this back to the entrepreneurial level, and I'm thinking about the people in the room who are currently renting and are on this trajectory that I was on of paying zillions of dollars to landlords. And a taxi driver once told me that the biggest business mistake I made was not buying my office. And I actually really agree with him. When I was in a 500 square foot office, I could have found a way to buy it. And, you know, I'm wondering for the people in the room, what you would advise about whether they should be looking about buying their office. For the people that are in Canada and are looking at coming here, should they be looking at buying a property? I know so many people who are leaving Hong Kong because they never bought a property in 30 years. And I think the same thing is really in the office market. So I'd be curious about your views relating to the SMEs that are here and on the other side of the ocean. You're kind of talking big numbers, big companies, whatever, but you know, the entrepreneurs are very important in Hong Kong, and our money speaks. So I'd love your views. Thank you.
Yep, sure. So size does matter, you're right. The big firms need the flexibility. Absolutely, the numbers stack up to buy. You know, I don't know what will be below 5,000 square foot. I don't know that number, but there'll be a number for an SME, right? And you say 500 square foot for you. Of course, it stacks up. You need the down payment, and don't worry so much about interest rates because they're pretty much tied into the US, so we're pretty safe there. Now, the only issue will be the short term, which, as we talked about, the higher vacancy rates, that prices may go down. So you need to take a longer term view. So let's just park that at 10 years minimum. So get in for 10 years. Yes, in theory, overall, it should go up. Overall, we'll go through the cycles. We've been in the longest down cycle in my working memory. It's been 4 years. So be aware of that, you know, it's not an immediate sell. That's number one. Number two is, buildings for sale are always developed at a lower quality than the grade A buildings. So do not expect to walk into Exchange Square, but they're not necessarily doing that. They want it for different reasons. And then really at the end of the day, now is a good time to buy. I know it sounds so corny, doesn't it? But with all the dynamics and the numbers that I've rattled off today, you could argue that it's actually a very attractive time to buy, with the exception of the interest rates going up, but you can factor that into your calculations. Is that fair?
Yeah, I think the market is not just grade A. We just mentioned about like 15% vacancy rate. I mean, even for grade B, grade C, we see the vacancy rate are really high, right? So that also means that it could be a good opportunity to bargain, right? At this point, right? So of course, for longer term perspective, depends on how confident about your business, right? So different people, different decision, but I think from timing perspective, it could be something that you could think about at this point when vacancy rate is so high.
And just, sorry, one quick point, just be aware of any upgrades that will or will not be done by the IOC. Sometimes they just won't pay any money, which means your building just goes further down the scale. That's it.
So you mentioned earlier, employers need to be flexible. Employers need to be flexible, but it sounds like the office is here to stay in Hong Kong at least, right? So that's one question that supports your buy. Second question I have is in terms of GBA, you know, we saw borders close for a long time. Do you think that there is actually an opportunity to live in the GBA and work in Hong Kong? Will people commute like they do in other cities?
Okay. Yeah, so yes, the future office is there. We talked about it. I think the issues, the challenges in Asia are down to, you know, the accommodation at home is too small. It's not secure in terms of the internet connectivity, etc. And people actually like to come down. So those are the three main points why we think that Asia or Hong Kong will continue as an office hub. For GBA, yes, that was always the plan. There's 3 bridges that go across the Pearl River Delta, plus the XRL that's meant to be bringing up 100,000 people a day, right? So yes, that's the plan. But the issue is obviously the freeness of the border to get in and out. You know, I'm just applying for my China visa. I can only get a commercial visa. I might only get one-way entry. I can't get my 3-year. I've filled out a 14-page form. Oh, if anybody's doing it, be aware, and it will take you about 2 weeks to get. So we need to get a lot quicker over the border. So who's it going to be? You're right. It's going to be Hong Kong Chinese first. But you're right. They will look at the surrounding areas. Number one, that's easy. And they say when it's about an hour's ferry ride or drive, then that's when people will consider it. So that's a key benchmark. But the other factor that I said earlier is it's about the schooling in the hospitals or the clinics. That needs to improve. So I'm not sure where that's going to go.
Yeah, just one thing very quick is on the mainland Chinese, they coming, right, working here. So I also got some colleagues doing that, right? Now with the high-speed train, we open, right? So we see that they travel more often, honestly. So like Friday, they travel back to Shenzhen or nearby GBA cities, stay weekend and then coming back. So that thing will also happen, but it doesn't mean that they will lose Hong Kong homes. They will still have homes here, but they have second home in China, in Shenzhen or other cities. So they travel a bit more often with the high-speed train. So which is great, right? Just 15 minutes, right, from Hong Kong to Shenzhen. Yeah.
All right, I think that's all the time we have for today. So can we give a big round of applause for our panelists today? Thank you very much for your time. A big thank you as well to my co-moderator, Carol, and thank you very much for being with us this morning.
Thank you, Carol, Keelan, Nigel, and Patrick. Please take a seat off stage. Before we move on to the next session with some networking opportunities, we would like to invite everyone to join us for a group photo. Please turn to your right-hand side and face the back of the hall. You will see a photographer setting up the ladder, and when he's ready, he would wave at everyone. Please put on your biggest smile for the group photos. After the group photo, the next session on presenting your innovation and technology footprint will commence at 11:10. Okay, please everyone, for the group photo, left-hand side at the back of the hall. Photographer Sunny and Soro, please let us know when we're ready for the group photo. Hi everyone, please look at our photographer at the end of the back of the hall. Are we ready? Yeah, please gather around in the center of the hall for the group photo, and we will count down 3, 2, 1 for a few shots. Are we ready? Yeah, please gather in the center of the hall. Yeah. Hi everyone, please look at the waving photographer. Yeah, please join the photo. Okay. It's okay. We have also a videographer. Are we good with the shots? Wait. Thank you so much for the group photo. The next session on presenting your innovation and technology footprint will commence at 11:10. See you in a few minutes.
This is BMO, a bank, but not just any bank. We're in personal and business banking, wealth management, investment banking, and we're a top 5 commercial bank with 14 million customers and nearly $1 trillion in assets, making us the 8th largest bank in North America.
I can go all day.
Sure, we're big, but being big helps us do big things. Achieve bold ambitions because we're a business driven by purpose to boldly grow the good in business and life. We're growing a more inclusive society by tackling financial barriers.
With the BMO grant, we are able to build this platform for women of color on a global scale.
Turning inequity into opportunity, exclusion into inclusion. One of Forbes' best employers for diversity. And we earned a spot on Bloomberg's Gender Equality Index 7 years in a row. We're growing a sustainable future, mobilizing billions to help companies worldwide transition to net zero emissions, making us the World Benchmarking Alliance's top-ranked bank for sustainability. We're growing a thriving economy where everyone benefits. Now that doesn't sound like your everyday bank, does it? We look different. We sound different.
Try embracing your inner squirrel.
Because we are different. Together, we're thousands of employees with one goal: to help our clients, their families, businesses, and communities make real financial progress. And that you can bank on.
Hello from Hong Kong Convention and Exhibition Center. Come and experience our $1 billion upgrade made especially for your events. We missed you.
Hello from Asia World Expo. We are at the heart of Hong Kong's air, land, and sea network. And you are at the heart of everything we do.
Hello from Hong Kong ISEA. Our entire Hong Kong exhibition and convention industry is all geared up to welcome you with open arms.
Hello from Hong Kong Trade Development Council. Our business fundamentals remain rock solid. So, think business, think Hong Kong.
Hello from Informal Markets. Hong Kong is rearing to go, and we're thrilled to be staging some of the world's largest trade shows here.
Hello from Global Sources. Hong Kong has always been home to flagship trade shows. We're confident to see our shows scale new heights here.
Hello from the Hong Kong Tourism Board. Hong Kong is ready to welcome you back for business and a whole lot of fun. We are here to make your business event a resounding success. Hello, Hong Kong.
See you
in Hong Kong, the world's meeting place.
Hong Kong, a city of opportunity, a strategic location that can propel your business to the next level. Perfectly placed to access Asia and the world. Work with the leading thinkers in finance, retail, technology, and transport. Invest where the world's most prominent international brands are flourishing. Become part of an innovative hub with world-class intellectual property protection, where VC funds, university researchers, and tech companies meet to create breakthroughs. Invest in a place that nurtures businesses so they grow, with a competitive and simple tax regime and the world's freest economy. Investing here means having the vision to see the region as a whole, building connections between East and West, making deals flow even faster. Hong Kong remains the region's business center and is the gateway to and out of mainland China, joining people and cultures for a vibrant business community, a city where people are passionate about work and play, to enjoy music, sporting events, culture, and nightlife. Capture opportunities in a booming Bay Area of 11 cities that are getting more connected. Set up shop in a place where an entrepreneurial spirit abounds. where people embrace change and startups thrive.
Session 9 on presenting your innovation and technology footprint will now begin. Please be seated. And technology footprint will now begin. Please be seated. Please welcome our moderator, Raj Diwan, Partner, Capital Market and Securities of McMillan, and our speakers, Evelyn Cahill, CEO and co-founder of Style Carousel, Ivan Lau, CEO and co-founder of Pantheon Lab, and Raymond Mack, CEO of Pharmacy. Welcome.
Hello. Good morning, everyone. Okay, we were just wondering about the mic. So first of all, very happy to be here. My name's Raj Dewan. I'm a partner with McMillan, and as some of you may know, we have an office here, and we've had the office here for 14 years. And I've been coming back and forth for a number of years, and I have to say, and even during COVID, so I have to say, it's so nice to be back. The energy is great, and we're really looking forward to this panel to talk about innovation and some of the opportunities in Hong Kong, how the environment has evolved, and get some really valuable feedback from entrepreneurs who have set up here, grown their business. And so why don't I'll introduce each of the panelists, and I would wait for each of you maybe just give a brief overview of your business. So to my right, Evelyn Cahill, CEO and co-founder of Style Carousel, Raymond Mack, CEO of Pharmacy, and Ivan Lau, CEO and co-founder of Pantheon Labs. So maybe we'll start with you, Evelyn.
Sure. Thank you for that kind introduction. So yes, we started off as a Hong Kong Chinese Canadian team. We still have 2 software developers actually based out of Vancouver, Canada, who were from Hong Kong. And my co-founder and I subsequently came to Hong Kong from Canada. And I'm very excited to share with you a project that we've been working on. It gives women in Hong Kong an ultra convenient way to access their favorite designer labels, discover new ones, and at a great price, with the option to book and to buy. Basically, our platform is essentially like a gateway that for merchants, including Hong Kong and Canadian businesses, to connect directly with this rapidly growing new economy here in Asia, and within minutes. So we've got fully tailored technology. We also have innovative turnkey solutions that we offer to merchants for free. And what we hope to do is make it easy for merchants to access an alternative stream of revenue and to benefit from an alternative stream of revenue that is rooted in circularity. So you can think of us as a better alternative to the existing cloud-based inventory management systems and e-commerce platforms out there today, because we are built with circularity in mind. So we've got full reverse logistics, we've got sustainability analytics, and we've got a dedicated team with strong shared values. We also work with our like-minded partners in Hong Kong and in Canada to develop a truly unique product. And this is both merchants, and end users as well, to develop a truly unique product that will hopefully change the way that we not only produce, but consume fashion, which is something that, is a part of our everyday lives.
Okay, hello everyone. I'm Raymond, co-founder and CEO of Pharmacy. So Pharmacy is a quite international team, but two of my co-founders, CTO and CFO, are actually Canadian, Chinese. Both come from Vancouver. Very important guys, to our team. And I think we are an international team that do agriculture data and system business. So when we say agriculture data, we are the first one in Asia to do decentralized farming, where we do the data to empower people to farm. So all our clients and partners in supermarkets, restaurants, malls, residential area, and also schools, they use our system empowered by the data that control the environment of the plants to grow very fresh, totally nutritious greens, and also reduce food waste. So all the partners that are working with us, especially in F&B sectors and also the supermarket sector, they successfully reduced the food waste by 25% over the past 2 years. And then also we are now the first agriculture company, technology company in Hong Kong to start our business in Thailand, and also planning to do it in Australia and the Middle East. Later this year or the early next year, probably we are planning, to start an engineering team in Canada as well. So probably, this is something that we would like to learn from you guys today.
Morning, guys. My name is Ivan. I'm the CEO and co-founder of Penvian Lab, and I think I'm the only one who missed the dress code this morning. So sorry about that. So I'm also from Vancouver. I started the company a little bit over 3 years. So it was what we're doing is generative AI. It's a buzzword these days. I'm pretty sure everyone were tired of these ChatGPT and all these other stuff on YouTube and all social medias. But that's what the directions we saw a few years ago, and we're all rooted in Hong Kong. Also an international team with a team of AI researchers, developers, and we also tapped into some of the Web3 elements like Metaverse. That's full of innovations in the team, and yes, just like Ray, we're also looking to expand to Canada if that's possible sometime in the future.
That's great. I mean, and I think you've touched upon something interesting there, Ivan, that I think Canada actually offers a lot in terms of setting up a business, having an R&D center. We actually have a client in Hong Kong Science and Technology Park, and we're actually working with Invest Alberta, but there doesn't seem to be a general awareness of some of the benefits of actually setting up in Canada and some of the benefits. So I'm really glad to hear that you're doing that. So we work with a lot of young growing companies that are globally looking at markets. And I think what would be great to understand from each of you is kind of, and you touched upon it a bit, but I would like to know, like, what brought you to Hong Kong? Was it a strategic decision? Were you here and that's why you set up here? And in setting up here, like, what were some of the challenges that you faced in those days setting up here in the innovation system in Hong Kong? So maybe I'll start with Evelyn.
Our team was originally based here in Hong Kong, and we were all working in the finance sector here. And we noticed that there's a gap in the market here in Hong Kong for our product. Basically, we noticed it was a very buzzy city. There were tons of events and opportunity for changes of clothes and outfits and things like that. And with that came a lot of waste. So in terms of why we set up here, one, there was a lot of opportunity. Two, it was a very small, kind of very densely populated city. And it had a very competitive last mile delivery services. I'm not sure if you're aware, but it's quite good compared to other countries. So it really helped us with order fulfillment. And lastly, there was a strong demand from the brands that we had surveyed and spoke to actually be here in Hong Kong. So that was one of the main reasons that we chose to test and set up here in Hong Kong.
And how about challenges? Like, what were some of the, I know it's very easy to incorporate companies here, it's very business friendly, but what were, as a founder setting up a business there, I'm curious on what the challenges were.
I guess in terms of the technicalities and things like that, it was very, very smooth, very easy, especially because we were all Hong Kong Chinese people, so it made it quite smooth. But one of the main challenges we found was at the time that we wanted to release our beta test and start actually rolling out our soft launch, it was towards the end of 2019 and 2020. And it was quite difficult in that the city was physically closing up. So it was very challenging because we're quite events-based. Our company really relies on that buzzy city life that we had talked about earlier. And with that challenge, I guess, came opportunity as well, in that what we noticed was as the city was physically closing up, it really began to digitally open in terms of its collaboration in the online space. So I would say in a way it kind of helped us in that stage, because we were still developing our product and trying to really fine tune it and make sure it was really solving problems for our users. So with that, I guess it made that online communication a lot easier. And an observation would be that we noticed a lot of the brands and the retailers we spoke to were a bit more willing to share their problems during that time. I think everyone was really on kind of survival mode and keen to open up and talk about their problems and express to us things that they might not have expressed to us previously. And it also made it easier for us to get meetings with them and connect with them, because whereas before, I think a lot of brands would have required a more formal meeting. I would have had to require to fly to the country to meet them, set all that up. It didn't seem so strange to kind of give them a Google Links meet and meet with them, at 5 p.m. before dinner, and say, hey, let's talk about the problems with your business and how we can find a solution for you. So I guess in that sense, that was our observation. And with these challenges and observations, what we noticed is we really created a communication channel and a dialogue, really, between the brands and the retailers that we were working with, and our end users and beta testers here in Hong Kong, to solve this problem and really kind of open up that channel. So we ended up making this a regular routine. We created a tool on our merchant dashboard, for example, where merchants can log in and generate quarterly reports that update them on the stats and analytics and give them insight on the things that are important to them. And we slowly kind of fine-tuned that and worked out, what it is that they needed to really solve the problems in their business, and how to make their business more circular. They find these things very useful. So I guess in that sense, we've created that dialogue to really open up the communication channels and further kind of bridge that innovation ecosystem within our partners and our end users.
I'm curious what the what opportunities, if any, there were for mentors. Like, were there were there founders around? Was there a network of people that you could access to as you were setting up your business who could guide you? I'm just curious. I know I didn't plan this question, but I was thinking about it.
I missed the question. Like, just start from the beginning.
So, are there, as a founder of a business here, do you see there being a community of people who can mentor startups, people that you can go to? Is that something that's readily available?
In the fashion and tech space, I guess sustainability tech space, I mean, generally, I think Hong Kong is excellent for startups. But what I found personally, and during that time, is the fashion industry really struggled. And a lot of those events and support channels really kind of closed up. So it was quite difficult for us, because that was the time we really wanted to launch and get at people's opinions and learn. So that was definitely a struggle. But what I did notice is that as the the opportunities in, I guess, fashion and maybe fashion tech kind of closed up a bit, I did notice that it kind of turned a bit more attention and awareness towards the sustainability element. People were a bit more hyper aware of the waste that was happening around them. And there was a real push at that time. Maybe there's masks floating around everywhere, and everyone was just kind of sick of it. So I did feel that there was a good kind of community in terms of people trying to help other people find more sustainable ways. So I guess with some bad came some good as well. Yeah.
Oh, that's great. Raymond?
Yeah, so basically we are a Hong Kong-based team. I was working in the consulting industry. And then before we form a team, then my CTO, who is the Canadian Chinese, he's also the winner of Alibaba Jumpstarter 2019, I would say, 2018. So we all come together in Hong Kong because our urban farming technology solution is really thinking Hong Kong is the best area to start. Basically because it can maximize our benefits and also the values to people here. Hong Kong has more than 98% of our vegetables being imported from somewhere outside Hong Kong, and this is why we can add values to it, because the situation here, we can actually grow the plants not only because we can save the freshness and also the nutritious, but then also we can maximize the ESG impact that we grow. Currently, if we can save the plants, imported from the US or the Europe or any other part of the world, then the 1 square meter farming system in our company can save almost 2 tons of CO2 a year. All right, so that's the thing that we can make an impact to our investor and also our partners, saying that we can help you not only on the plants but also on ESG as well. And basically, if you look at Hong Kong, even very small city, of course, but then the economic benefits and also the partners here are actually really good. When we talk about the supermarket, within that small city, we have 700 supermarkets in Hong Kong. One of probably like more than 100 is actually middle to high for middle to high income group. And then the number of middle to high end restaurants is more than 400 to 500 as well. So within this very small city, we can actually maximize of our impact here. And of course, because of the international network in Hong Kong, we can easily got in touch with other countries as well, because where most of the regional headquarters, not only the supermarket, but also other land developers and fund are all based in Hong Kong, so to make us to expand to other market really possible. So this is why we think that if we talk about the urban farming technologies and solution, Hong Kong is one of the best places in the world.
Cool. Yeah. So I came back in the middle of 2019. So starting out wasn't as easy. But then why I actually I was in sorry. I started my entrepreneurship 10 years ago. So I actually came back to Hong Kong from Vancouver, being a software engineer. So it was great because I was working for SAP in Yaletown, if everyone remember that. And then I came back to start a business solutions company with some partners, and they were. And back then, 2012, it was a very good years when Chinese economies were booming. So we're like, oh, let's just start some business. in China, but we were in Hong Kong. So you know, without knowing, there's a lot of logistic nightmare working between Hong Kong and the mainland back then. So we started out, we ended up okay, and then I moved to Malaysia to start another startup. So a few years later, you know, got a little bit of exit, and then I was thinking, hey, should I? What's next for me? So and then I was very into the deep tech, and then I was scouting who are the candidates, or what how should I assemble my team, and I found that Hong Kong has you know, huge talent pools of good talents, especially in engineering and in scientific researches and stuff. So I came back, chat with a few universities, professors, and then we kind of got my team that way back in 2019. I still believe back in the days when we got lots of talent pools to do heavy research, we got lots of international students who came here to study and then wanting to stay in Hong Kong. And same for, you know, we got people from France, UK, you know, US, India, Malaysia, and they all wanted to stay here. So it's a very good place for us. And then some of it, but then I guess we didn't start out started at a very good time, but like the market wasn't as great, and also well, because what we were doing, I mean, now is cool stuff, but you know, 3 years ago, when you say, hey, you know, we will build an AI that could really talk to you like a human, and then they were, oh, that's cool. Are you in fintech? No. Are you in biotech? Are you building cure for COVID? No. So we're not interested. So and then yeah. So but yeah. After all these years, I think market has picked up. I mean, it's a great environment right now. Like I think it's just feel very different now.
So there's an interesting comment about there being a depth of a talent pool. Like, and I think it's fair to say that we've seen in some parts of North America or even Europe, like there is a shortage of actually good, strong, technically trained engineers. Is that still the case here? Like, are you seeing, I know your comment that people always wanted to be here, whether they're from India, France, has that changed since you set up? Like, or do you see people going, you know, back to Silicon Valley or other markets?
Yeah, very good questions. Actually, no, we still get, you know, on a weekly basis, we do get organic resumes coming in, and again, the way we ask them, like part of the reason is because we're also in Hong Kong. It has been a very good place. I mean, it has been. Everybody knows Hong Kong is a very international city, and they don't see like themselves coming here will have problems blending in. That's a very big plus for a lot of candidates for us.
It's great to hear. So one of the things I think founders of companies are always looking at when they're assessing a jurisdiction is kind of funding. You know, what's the VC environment like? What's the ability to raise capital? Are there you know, local institutions, government or otherwise, that would support startups? I'd really like each of your insights on kind of what that environment's like. Has it changed since you started? Is there more of an appetite for investing in growth stage companies, or?
Yes, I think we see a lot of changes in the past 3 years. Like I said before, I think Hong Kong used to, at least when I started, used to be very heavily invested in fintech. I think that's no doubt, right? I mean, it's very understandable. It kind of the investment appetite kind of had that bias, but over time, yes, and of course we also had that government support from the Science Park. We were in the incubation program. That kind of changed quite a lot. At least we don't have to concerned about the rental. It was very heavily subsidized for us. And then they also helped us in reaching out to the right investors, right partners. So that really helped.
Like local investors.
Local investors, yes. And as the market change, I guess because what we do is it's very virtual thing, right? Like metaverse, we do digital humans, we do all these AI stuff that happens online. So when COVID hits us, it's actually it was kind of good thing for us that people start to realize there are quite a lot of potentials how we could change the way we deal with the internet. Yes.
Yeah. So for funding, we mainly talk about the public and private fundings in Hong Kong. So I think a few years ago when people talk about the startup ecosystem in Hong Kong, they have been saying that, the money, especially from the government, is not that encouraging in terms of supporting the system. But then, in fact, when we do the research and also, experience of pharmacy, it is actually not the case. In Hong Kong, government, as what Ivan said, that we are from Cyberport, and then also, we have a new tenancy in Science Park that we get quite a lot of funding in terms of the rental, and also, some of the not co-investment, but then the support, to get the technology adoption in the community. For example,
so supporting kind more, or
just in kind, because for example, we have a technology adoption with a F&B operator to run a collaborative F&B project in the full pharmacy in Science Cyberport. So instead of getting direct investment from Cyberport, but then we can get a really good rent. To run these startup F&B collaboration projects is where to get the people to understand how we can use the greens, the farm to table experience, not only on the provision and the supply, but also the services that make us a true farming as a service company. So this is part of the funding that we have. And then over the past few years, we didn't really have to actively look for external funding yet, because we work with the universities on the R&D with fundings, and also some of the public funding, from a BUD fund, for example, ESS, and all these kind of government-funded program that can make us, really grow not only in Hong Kong but then also in other places in the world already. So, but of course, the reason why we say, the funding situation, or especially the public funding here, because rent is high, the labor cost is high. So that's why, compared to the Thailand ecosystem, the Singapore ecosystem, comparatively, the funding that we got, the burn rate is actually, faster than others, right? But really, when we compare, for example, in Thailand, when we look at the incubation system, if we set up the office there, they can give you the office, but then you have to rent it, and then they get you probably 6 to 8% of the equity, which is actually pretty crazy. Yeah. So so this is the thing in Hong Kong, that they get the funding to you, and then they didn't really ask for any equity. So for the public funding, I think especially on the past few years, it's getting more mature. On the private funding, I think Hong Kong is very strong in Series A and above. So in terms of course, we got a really good angel and seed network, but then the real money to get into the investment is always Series A and Series B right now. For example, especially for the corporate fund, when we talk to them, then definitely they're looking for Series B and above, where they can they would rather make a more safe bet, on the startup business. So
because you're commercialized, so they're not taking
commercialized. They have to have a they want to invest in a growth stage rather than an MVP and a prototype stage. And then also when we talk to other players in the field, and most of the fund may not be very interested in investing in R&D. So rather they want you to be really ready, for the market. So there's actually a little bit of a characteristics in Hong Kong. But then when you look at these characteristics, it means that when you are ready to accelerate your business, then Hong Kong is one of the best markets in the world.
I guess a lot of the points have already been touched on there, but for the fashion space, again, I guess my personal experience has been a bit different because of the period of time in which we were trying to soft launch our product. But unfortunately, I think during that time, a lot of the funding opportunities had dried up in the fashion space, which is again why we actually had such a strong network with the partners that we do work with. In terms of finding space to work rent-free and all that, I think that still is out there. There's a few here in Hong Kong that do support fashion startups and fashion tech startups. Although in terms of the large-scale funding that was pre-2019, I'm not quite sure that that opportunity is still there, but I do expect it to come back as the city opens up. So I guess for us, our personal experience, what we've had to do, and we're not at the stage right now where we're looking for funding, but we've kind of gone for a model where we actually work with our partners to fund essentially what we're doing, in that because it's so collaborative, a lot of the other, I guess you could say, circular or rental platforms out there in fashion have traditionally bought all of the inventory. So that would require 30 million or plus in terms of fundraising just to actually start your project, because they have to buy tons of inventory to even get started. Whereas what we've done is we're completely inventoryless, and we kind of share the costs with our partners, in that with our technology, they're able to stream in real time their inventory onto our platform, and customers can use it. So we don't actually have to have that upfront cost, and they don't have to have that upfront cost in terms of investing in an entire platform to enter the circular market, because that's just really a big task for any single retailer or brand, or even a lot of the small independent labels that we work with. So I guess in terms of trying to get funding, it's, do you really need it at the stage? Or are there other more creative ways that you can try to work around it until you get to a stage where you really need it? So I don't think necessarily, even though that funding space might have dried up slightly currently right now, that you need to kind of be demotivated because of that.
Yeah, and I think it's fair to say it's globally the venture environment's kind of shrunk with valuation. So there's challenges here that are no different than challenges in other systems, other innovation markets. So I know the last panel kind of touched upon the property market, and there was a bit of a discussion about Singapore, Hong Kong. So let me frame it in a broader sense. Like, obviously, since COVID or post-COVID, and even now, we have seen the emergence of other jurisdictions, whether it's Singapore or Dubai or others, that have kind of tried to position themselves as homes for startups. Maybe some more focused on particular sectors, crypto, perhaps in the UAE, fintech, family offices, asset management in Singapore. I'm curious as to your thoughts as founders sitting here in Hong Kong, witnessing this. We have gone through a change in the policy environment here. What's your assessment of kind of those markets? Do you see peers of yours going to Singapore or Dubai and leaving Hong Kong or setting up other divisions? I'm curious on each of your thoughts about this, because this is like a live issue, right? Like, for people who are now looking at markets, they're trying to understand the value propositions of each. And I think we've talked about Hong Kong, and I mean, for what it's worth, I would say I still think Hong Kong has a very entrepreneurial streak or DNA. It has a high level of sophistication and experience in terms of doing international business. So there is a learning curve in some of those other markets, but I'd love to get each of your perspectives on that in this debate.
So over the past few months, I've been traveling, to different places, and then one of the places is Singapore. Singapore, I think everyone knows right now the capital market is vibrant there, right? With a lot of hot money, and then for the investment opportunity there. I think in terms of agriculture technology sectors, I think in Singapore compared to Hong Kong, they have a more mature industry policy supported by the government. So since 2021, we have been in touch with the Singapore government for different discussion points, to see whether our technology can be landed in Singapore. And then actually we see the policies is actually very mature there, in terms of the support, in terms of land and others. But of course, the setup time will probably 6 to 9 months. Okay, it's a little bit longer than what we do in Hong Kong. But then it's only when you want to get the funding support, from the Singapore government. But in terms of the community, where the investor for food tech, for agri-tech in Singapore is actually good. And then and on the other hand, we are also in touch with 2 major corporations in the UAE, the Abu Dhabi and also Dubai. They are very interested, mostly because they are also investing a lot, including one of their very important event, COP28. Later this year, so that the market and also the investors and also the government get quite prepared for anything related to ESG, with the green living, which is actually quite in line with our strategy and vision. So when we see the jurisdiction, then what Hong Kong may need to catch up with will probably the industry policies, where the government has been quite I would say they didn't really invest a lot, in the industry sectors. So most of the funding are actually, to all sectors, all different part of stakeholders. And then I also, when we talk to the government, we also say, there should be some support from the government in the national pitch, where the government officials can support some of the major project pitch on a global context. So I will say. We are of course catching up. You can see the new government session. They start changing their mindset. Also they start doing something differently. Not sure about the results, but then definitely is something that probably we need to invest in.
Yeah, so I think it's a welcome change from the last news we have heard. Just that I guess from the talent perspective, I think like something that we could maybe reference Singapore side is that like they do protect the local PRs, and in order to establish business, you do have to have a local director or like some interest back to the locals. I think for us, like spending a few years, building up the businesses. When we hear, oh yeah, like we need to get more talents coming to Hong Kong by having a lot of incentives to outside companies from different regions. We were like, it's great, but you're giving the money to other corporates from other countries to come here to take our talents, where we spend our time building up the talent pool. And well, I mean, that might not be very to our best of interest, who spend a lot of time building up the business here. So I would say like that might be something that the policy could help us out here in locally. I mean, sorry, it's a Ken Chapman. I forgot, but yeah. So, but it's good just to. I mean, for our side, we do our biggest markets actually is not from Hong Kong, like Southeast Asia, Japan. Like we do have a lot of businesses from there. But we choose to stay here. I think we do see the potential that we could build like from all these policy changes. It could be a very good innovation space in in Hong Kong, yes.
For Hong Kong, I mean, I still think it's a great place to attract talent, and I think they'll continue to attract top talent. And I guess just for our unique experience, at that time, it just happened to be quite difficult to hire, especially the foreign talent that we had needed with the skill set that we needed to really set up here. So we did naturally look to Singapore when we expanded our network. So we did end up moving a good chunk of our technical team over to Singapore, where we were able to easily get work passes, multiple work passes within a few months, and set up bank accounts and all like that virtually. And I think as Hong Kong opens up again, I feel that similarly that will be the case. And hopefully, the policymakers here in Hong Kong will continue to work on streamlining that process and just making it a lot easier for startups to hire the teams that they need that might not necessarily be local people in Hong Kong. And I guess that goes the same as if we were to hire our technical talent from Canada coming into Hong Kong, just making it a bit simpler and quicker. That would be really nice. So that would be our personal experience with that.
Oh, that's interesting. Well, we have 5 minutes left, and so maybe we'll pause and open up the floor for any questions from the audience.
Oh, and I wanted to add something that Nigel was speaking about earlier about the Greater Bay Area. This is an area that a lot of our partners have expressed interest in the fashion and sustainability tech space, and even designers, fashion labels themselves. And we're just not really aware of any kind of schemes or plans for Hong Kongers or even, people based in Hong Kong or Canada to actually access that market. So that would be another kind of point that I would like to make, and it'd be really helpful,
It's a great point. It's a great market, and Hong Kong is a great stepping stone for that market. Well, I didn't see any questions, so I wanted to thank each of our panelists for your time and your insights. It's been great. Thank you.
Thank you, Raj, Evelyn, Ivan, and Raymond. The last session of the conference on what is the future of sourcing, trading, and manufacturing for China and beyond will begin at 12:10. See you in a few minutes.
This is BMO, a bank, but not just any bank. We're in personal and business banking, wealth management, investment banking, and we're a top 5 commercial bank with 14 million customers and nearly $1 trillion in assets, making us the 8th largest bank in North America.
I can go all day.
Sure, we're big, but being big helps us do big things. Achieve bold ambitions, because we are a business driven by purpose to boldly grow the good in business and life. We're growing a more inclusive society by tackling financial barriers.
With the BMO grant, we are able to build this platform for women of color on a global scale.
Turning inequity into opportunity, exclusion into inclusion. One of Forbes' best employers for diversity. And we earned a spot on Bloomberg's Gender Equality Index 7 years in a row. We're growing a sustainable future, mobilizing billions to help companies worldwide transition to net zero emissions. Making us the World Benchmarking Alliance's top-ranked bank for sustainability. We're growing a thriving economy where everyone benefits.
Now that doesn't sound like your everyday bank, does it? We look different. We sound different.
Try embracing your inner squirrel.
Because we are different. Together, we're thousands of employees with one goal: to help our clients, their families, businesses, and communities make real financial progress. And that you can bank on.
Hello from Hong Kong Convention and Exhibition Center. Come and experience our billion-dollar upgrade made especially for your events. We miss you.
Hello from Asia World Expo. We are at the heart of Hong Kong's air, land, and sea network. And you are at the heart of everything we do.
Hello from Hong Kong ISEA. Our entire Hong Kong exhibition and convention industry is all geared up to welcome you with open arms.
Hello from Hong Kong Trade Development Council. Our business fundamentals remain rock solid. So, think business, think Hong Kong.
Hello from Informal Markets. Hong Kong is rearing to go, and we're thrilled to be staging some of the world's largest trade shows here.
Hello from Global Sources. Hong Kong has always been home to flagship trade shows. We're confident to see our shows scale new heights here.
Hello from the Hong Kong Tourism Board. Hong Kong is ready to welcome you back for business and a whole lot of fun. We are here to make your business events a resounding success. Hello, Hong Kong.
See you
in Hong Kong, the world's meeting place.
Hong Kong, a city of opportunity, a strategic location that can propel your business to the next level. Perfectly placed to access Asia and the world. Work with the leading thinkers in finance, retail, technology, and transport. Invest where the world's most prominent international brands are flourishing. Become part of an innovative hub with world-class intellectual property protection, where VC funds, university researchers, and tech companies meet to create breakthroughs. Invest in a place that nurtures businesses so they grow, with a competitive and simple tax regime and the world's freest economy. Investing here means having the vision to see the region as a whole, building connections between East and West, making deals flow even faster. Hong Kong remains the region's business center and is the gateway to and out of mainland China, joining people and cultures for a vibrant business community, a city where people are passionate about work and play, to enjoy music, sporting events, culture, and nightlife. Capture opportunities in a booming Bay Area of 11 cities that are getting more connected. Set up shop in a place where an entrepreneurial spirit abounds, where people embrace change and startups thrive. Live and work in a smart city, where fast data and cutting-edge technology means everyday life just got easier. Launch and expand your business where smart also means safe, in one of the world's most secure cities. Invest where you can easily find the talent with the right backgrounds and skills. Invest Hong Kong is here for you, to get you started and help you grow. Hong Kong, an unrivaled, world-class city where business goes to grow.
This is BMO, a bank, but not just any bank. We're in personal and business banking, wealth management, investment banking, and we're a top 5 commercial bank with 14 million customers and nearly $1 trillion in assets, making us the 8th largest bank in North America.
I can go all day.
Sure, we're big, but being big helps us do big things. Achieve bold ambitions because we're a business driven by purpose to boldly grow the good in business and life. We're growing a more inclusive society by tackling financial barriers.
With the BMO grant, we are able to build this platform for women of color on a global scale.
Turning inequity into opportunity, exclusion into inclusion. One of Forbes' best employers for diversity. And we earned a spot on Bloomberg's Gender Equality Index 7 years in a row. We're growing a sustainable future, mobilizing billions to help companies worldwide transition to net zero emissions. Making us the World Benchmarking Alliance's top-ranked bank for sustainability. We're growing a thriving economy where everyone benefits. Now that doesn't sound like your everyday bank, does it? We look different. We sound different.
Try embracing your inner squirrel.
Because we are different. Together, we're thousands of employees with one goal: to help our clients, their families, businesses, and communities make real financial progress. And that you can bank on.
Hello from Hong Kong Convention and Exhibition Center. Come and experience our $1 billion upgrade made especially for your events. We miss you.
Hello from Asia World Expo. We are at the heart of Hong Kong's air, land, and sea network. And you are at the heart of everything we do.
Hello from Hong Kong ISEA. Our entire Hong Kong exhibition and convention industry is all geared up to welcome you with open arms.
Hello from Hong Kong Trade Development Council. Our business fundamentals remain rock solid. So, think business, think Hong Kong.
Hello from Informal Markets. Hong Kong is raring to go, and we're thrilled to be staging some of the world's largest trade shows here.
Hello from Global Sources. Hong Kong has always been home to flagship trade shows. We're confident to see our shows scale new heights here.
Hello from the Hong Kong Tourism Board. Hong Kong is ready to welcome you back for business and a whole lot of fun. We are here to make your business events a resounding success.
Hello, Hong Kong.
See you
in Hong Kong, the world's meeting place.
Hong Kong, a city of opportunity, a strategic location that can propel your business to the next level. Perfectly placed to access Asia and the world. Work with the leading thinkers in finance, retail, technology, and transport. Invest where the world's most prominent international brands are flourishing. Become part of an innovative hub with world-class intellectual property protection, where VC funds, university researchers, and tech companies meet to create breakthroughs. Invest in a place that nurtures businesses so they grow, with a competitive and simple tax regime and the world's freest economy. Investing here means having the vision to see the region as a whole, building connections between East and West, making deals flow even faster. Hong Kong remains the region's business center and is the gateway to and out of mainland China, joining people and cultures for a vibrant business community. A city where people are passionate about work and play, to enjoy music, sporting events, culture, and nightlife. Capture opportunities in a booming Bay Area of 11 cities that are getting more connected. Set up shop in a place where an entrepreneurial spirit abounds, where people embrace change and startups thrive. Live and work in a smart city where fast data and cutting-edge technology means everyday life just got easier. Launch and expand your business where smart also means safe. In one of the world's most secure cities. Invest where you can easily find the talent with the right backgrounds and skills. Invest Hong Kong is here for you to get you started and help you grow. Hong Kong, an unrivaled, world-class city where business goes to grow.
Session 10 on what is the future of sourcing, trading, and manufacturing for China and beyond will now begin. Please be seated. May I have your attention, please? Session 10 is about to begin. Please be seated. Session 10 on what is the future of sourcing, trading, and manufacturing for China and beyond will now begin. Please be seated. Please be seated. Session 10 on what is the future of sourcing, trading, and manufacturing for China and beyond will now begin. Please welcome our moderator, Rosemary Goder, co-founder of Systematic Edge, and speakers, Jack Chong, General Manager of Prosperity Lighting Group, Kendall Lowe, CEO of Kazoo Technology, and Sheldon Lee, co-founder and CEO of Buy and Ship. Welcome.
Well, welcome everyone to panel number 10. Our discussion today is going to be on what the future holds for sourcing, trading, and manufacturing in China and beyond. Okay, so before I start and ask my questions, I want to ask you guys, who of you work in or work with clients who are doing sourcing, trading, or manufacturing? Can you put your hands up? Not, yeah, good. I mean, I think, most of us who do professional services, these are our main clients here, as it's a huge hub, yeah, in Hong Kong. Okay, so this panel was organized by the newly formed Sourcing, Trading, and Manufacturing Committee here in Hong Kong at the CanCham. And we have 3 well-known Canadian business owners from this sector that are going to share with us their pearls of wisdom and their hard-won, battlefield stories, okay? So this is going to be a sharing session and just a conversation between 3 guys. So you guys all know already who's up here, so I'm not going to, retell you. I'm going to tell you one really important thing about each one of them, though, okay? So Jack is a UBC grad. Yay! And Kendall is a UBC grad. Yes, and Sheldon is a U of T grad. So I'm an SFU grad, so we have 3 West Coasters, and we had to have a little diversity, so we brought in Sheldon. So thank you, Sheldon, for joining us. We really appreciate that. Okay, so before we get started, I'm not asking these guys to tell you what they do. I'm asking them to tell you why they do it. Okay, what's their why? So Jack, what's your why?
I think one sentence really sums it up is we light up the world.
I love it. Okay.
What we do is we want to bring interactivity and gamification to the learning journey of kids. That's why we're doing this.
Excellent.
I was solving my sister's problem. She's trying to do cross-border shopping. It was difficult. We're trying to make it easier for her.
That's a good why, right? Sisters, super important. Okay, so we're going to start with our questions. And this one is hopefully to answer some questions that our listeners in Canada might have, okay? So what questions, you guys, so they're just going to have a conversation. So this is not a panel discussion. This is a conversation. So what questions should any business in Canada be asking themselves that wants to distribute, set up, or sell in Asia? So I'm going to start with Kendall.
I think, for someone from Canada, if you have a heart to try to explore the market here in the region or Hong Kong, I think the first question you need to ask yourself is, so why? Is that the market that you think your product will have a potential product market fit, or you want to try to test out in your region, and whether you would think, manufacturing in this area here will have an advantage over doing so in Canada. That pretty much sums up what I think, you should be asking if you are considering coming to this region.
Yeah, but I think besides the why, I think is you also have to really think about how you're going to do it, right? As a Canadian or friends who are in Canada trying to start a business, going into, say, even Hong Kong or China feels like a daunting task, right? I think the first thing you should really be asking yourself is, do you have the right connections or contacts right? As maybe a startup, maybe the quick answer to that is no, you don't have it. So I think you need to leverage whatever network that you have, because we're all Canadians or from Canada or some Canadian connection. There's a lot of people who work in Hong Kong or work in China who have a Canadian connection and are willing to help in all different types of industries, right? So no matter whether you're selling, distributing, or sourcing, you need to find the right people to ask the right questions, right? Because if you don't have some of those answers, then you shouldn't just dive your head deep and start sourcing from China or Asia.
Yeah, and I think it's really important to be here. So the question is, are you committed to it? You have to spend a lot of time here. But once you hit the ground here, there's a lot of networking, events that solves your problem. So I think being here is very important.
I think ChapmanCraig event here is one of the very good occasions for networking, right?
Are there some markets that are more interesting to enter than others here in Asia? And are there some special considerations to think about China versus, any of the ASEAN countries that you would, that you'd want to talk about for these guys?
I think speaking personally though, since I'm in the lighting industry, and for those who don't know, I think the majority of all lighting products is produced in China. It's just a matter of fact, right? So if your business is lighting related like mine, you have to go to China. And I think with that, you also have to identify within your industry that you want to get into, where is it that the hub is, right? It doesn't have to be China, or even within China, you have to figure out, is it Guangdong area? Is it Zhejiang area? Where is the sort of the Mecca or the hub of manufacturing, right? And then to go there and take a look for yourself, right? I know a lot of customers or friends who source but have never ever even visited the factory that makes their products, right? So that's just quite interesting, right? You think, oh, I'm just buying and selling all this stuff, and I don't even know how it's made or who makes it, right? And how they make it. So this is something that they really should consider.
And what about selling into, those Canadians that are selling into Asia?
I guess I'll start with this one. I mentioned that we make gamified products to help kids learn. One of the biggest products that we have is to help kids learn the Chinese language, which is a very challenging subject to learn, needless to say. And for us, it's a no-brainer to choose Hong Kong because, Hong Kong kids have the toughest life in this department. Think about it. You go in mainland China, Singapore, they speak Mandarin. What they speak is what they write. In Hong Kong here, we speak Cantonese. But when we write it, we actually can't write what we speak. We have to write it in a different way and in traditional Chinese characters. Plus the fact that now kids are required to learn also Mandarin and simplified Chinese. So, this is the biggest headache right now for parents, and choosing the market and sell our products here in Hong Kong really addresses the pain points. And we do have plans to extend our product lines to nearby regions like ASEAN or mainland China. So being in Hong Kong here, really it's the best fit for us in terms of both market and also manufacturing proximity to Shenzhen and Dongguan.
For selling into, I think Asia, Southeast Asia especially is very interesting. We have entered 12 consumer markets here in Asia. We've done Philippines, Malaysia, Singapore, Indonesia, and all that. What we've learned is that do we have the right local partner to work with? It makes everything much easier, right? And at the same time, I've shared with you guys, I've started, many JVs, and at least 5 or 6 times we got screwed, and so it's a way to go, but at the same time, it's very risky as well. So finding the right partner through our investors is much easier.
Okay, so before I move on to the next question, if we were to tell a story So Sheldon just shared a very personal story. If we were to tell a story of either like your business or someone's that you've seen, right, that has tried to distribute or sell into Asia and a lesson learned from that experience, what would it be?
So I'll first describe a little bit of what, one of the things that we need to manufacture is a new type of smart cards that when you put on touch screens, it interacts with an iPad directly on the screen. And that's like a technology that we have patented. So when we first started out looking for a manufacturing partner with zero experience in manufacturing, so we were very naive in, okay, well, Shenzhen and Dongguan is nearby. And so let's just go up there and knock on doors and see which manufacturing partner we can team up with and explore how to make this technology and product in mass quantity. So we learn a lot of lessons here. I mean, for example, we got cheated a little bit of money. Quality control is a big issue. I love to tell people this, but at one point, on one occasion, I had to sleep in the factory to monitor those workers to make sure they were manufacturing all the stuff to specs and making sure that they deliver first thing in the morning. And I took the first high-speed train back to Hong Kong, carrying the product samples to deliver to client. So then we really learned it a hard way that there's something much easier closer by, which is eventually we found a partner here in Hong Kong, a long time history, local manufacturer with factories in Shenzhen area. Now, working with the right partner, as Sheldon just mentioned, is super important. Now, Hong Kong has a long history of manufacturing, starting in the 80s, even 70s. A lot of these factories in the 90s, they moved over to expand and move their manufacturing facilities into Shenzhen, Dongguan, etc. But they carry a ton of experience, and Hong Kong people are known for delivering quality, being responsible, and all that. So now we found this partner. All we need to do is give them all the specs. They're very patient in working with us to turn our ideas into prototypes, and they on our behalf they monitor the factories, Q&A process, and logistics. It's just a no-brainer. I mean, in the beginning we were thinking, okay, well, if we go straight to factories in China ourselves, maybe we can cut costs a little bit. But turns out we have to pay more in terms of lessons learned. So I think that's one of the key stories I would like to tell people.
No, I think my story is slightly related, but standing from the opposite side. We were the partner that one of the startup customers came to ask for help to get into the market, or from a manufacturing standpoint. They were selling in North America. They were based in North America and wanted to find a factory, but didn't know where to go, right? So through networking or friends of friends, we met and we helped them out, right? So basically what we ended up doing is I told them, don't worry about anything about manufacturing. Tell me what you want made, and we'll take care of the rest, and they can concentrate on building the market and doing the selling, and leave the QC, leave the heavy duty factory work to us. As either we have our own factory or our vendors that we work with, right? I think that really helped him at least at the beginning, right? So that he can trust that, and then later on, of course, he started doing his own direct sourcing once his company grew to a certain size, and we were okay with that, because as a business person, that is the way to go if you want to grow later on in the development of a company.
Okay, so these guys want to talk about manufacturing and sourcing in China, right? So what are the trends that you're seeing in manufacturing, sourcing, and trading from your perspectives, and logistics that support it? Jack, what are the trends?
So because we do operate our own manufacturing, I think what we're seeing right now is very realistic. The cost of labor in China is much, much higher than it was 10 years ago. I'm not talking percentage points, I'm talking, probably triple or multiple 100% of increase of cost, pure cost, not just the salaries that they get paid or what they expect to get paid, is all the fringe benefits that now a typical laborer or manufacturing worker expects and demands, and all the welfare and all the other things. So it quickly adds up. And also, you know, all the regulations of manufacturing now that the Chinese government is imposing, as the country develops, its demands and it's more strict in terms of environmental or safety. All those things add up, and what that entails in terms of a trend is towards automated manufacturing, or what we call is we require now not just a laborer but a skilled labor, right? A skilled laborer can operate a fully automatic or semi-automatic assembly line. You know, less people, but they're now operating very sensitive and highly technologically advanced equipment. So it's not just, you know, a couple thousand people tinkering away and trying to build things by hand, right? So we see that as a huge trend, and it will change how China operates as the main manufacturing hub for the world.
Yeah. How about you guys? Do you see the trends that you see from your perspectives?
Actually, there's something interesting, which is like more D2C is happening, you know, Shein.com, Peppat.com, you know, going from manufacturers, leveraging the supply chain that China has and go directly to consumer, which is growing really fast. And we can see, you know, Pinduoduo is also going to the States and getting really good tractions, right? So there's something that is happening, you know, in terms of that.
I think from a startup perspective, if you have a new product, a new technology that you want to look for, you know, someone to try out the production with you. I think as Jack mentioned, I mean, China is slowly moving up the value chain in terms of what products they manufacturing, whereas a lot of commoditized products are maybe moving over a lot more to Cambodia, Vietnam, etc. So maybe it's about my perspective is, you know, if you have a startup, new kind of product idea, you know, so China could be a good fit for you because you might not be ready for, you know, large quantity manufacturing in Vietnam, Cambodia yet. And for us, when we first started, just trying out the product idea, right? You know, as a startup, fast iteration is key. So I remember back then, every time we had a new design or slight changes in design, all we had to do is just ship the design, send it over to our, you know, partner in Hong Kong, who then send over to Chinese factories. And then in 2 days, we have the parts back and we can carry out testing. Now, I can't say that can be done if, you know, your factory is somewhere overseas in Vietnam. The shipping would definitely cost, you know, more than a week to arrive. So fast iteration would be a good reason for you to, you know, think about this region here.
So what about China plus one? Is a plus one a real thing? What are the pros and cons? So Stephen Phillips asked me about it yesterday, and I deflected the question so you guys could answer it. So what? Yeah, tell us about that.
No, I think we have to really look at it. You know, depending on the business, I think is the tariff situation is very real and long-lasting situation. I think maybe a couple of years ago we may have thought, oh, maybe it'll get canceled later on, but it looks like it's here to stay, at least for the next little while. So as a business owner or as an entrepreneur, right, you do have to take that into account and really look at how to work with your partners and vendors to expand into other regions, right? To explore that China plus one model, right? Even for ourselves, we do look at it, especially for our US market. And we do evaluate our vendors and partners to say, okay, do you have the potential and capacity to set up shop somewhere outside of China? And that we will take that into consideration when we work with them.
I would say, you know, China logistics is just way better than everywhere else, you know, with the volume. So even with that, I think it's hard to replace.
Okay, so so I want to hear some stories about China Plus One, right? We've all heard them. So our clients have tried it as well, and there's some lessons learned. So, so do you have any stories that either you've gone through yourself or that that you've heard from those around you that that might help those who are thinking about their you know their manufacturing destination and evaluating them?
I mean, for us, we're not quite at a scale where we have a huge amount of quantity produced for our products yet. So I think for now, we'll probably stick around with the region. But truth be told, I just came back from Singapore last week, and just to feel out the the whole China Plus One discussion, and the way we stand with our positioning at our current state of the company is we'll use Hong Kong as the base sort of manufacturing / market hub, but then we extend our product outreach to nearby regions like ASEAN. And when that happens, then Singapore could be a potential sales extension. But for us, Hong Kong has all what we need here at the moment, manufacturing and core market-wise. So that will be our strategy at the center.
I think for us, or a story that I can share is something that probably already exists quite a bit, but I think something that we further expand on is what we call local for local. And what I mean by that is all the components or key technologies actually built in China, but assembled in the local market, right? Be it in Southeast Asia, be it in North America, be it in Europe, everything is, the final assembly is done locally, right? For tax, for cost, for tariff reasons, for logistic reasons, there's advantages to doing local for local. Maybe the main disadvantage is the how to delineate where the warranty resides, right? Because for our products or any type of hardware, the finished product, if it goes wrong, you blame the factory. Well, if the factory only did the assembly, do they take the full blame, or do the component vendors do that, right? So this is, in the past, with everything is made in China, is not a concern because the main factory bears all the risk. But when we do a local for local or a local assembly, this is something you have to be careful about in any industry that you're in.
And so the sanctions have pushed a local to local theme?
Yes, the sanctions have pushed or persuaded or influenced to make some of those decisions, where in the past, we would have thought it was not worth the risk, right?
So, I mean, I guess that brings us to the geopolitical and COVID situation. We don't want to talk about the geopolitical situation per se, but how it's affected business decisions, right? Because there's some real impact on the business decisions that people have made in the past year and have made for their short-term and longer-term business plan. So, for you guys, how has that affected those business decisions? Sheldon?
For us, since we're a tech company, we raised money from investors. I still remember, my investor got into my car. The first thing he said was like, "Sheldon, please don't make money. I mean, not be profitable. Focus on the growth," right? So the priority was growth versus net profit or bottom line, right? And for the past 5 years, that's the plan of the company. But when that happened, we're not sure about how the world's going to change, how the capital market is going to react. So we decided to turn profitable, right? Which is a great exercise. Before, we don't really focus on efficiency. We focus on growth, right? Maybe it's more expensive to hire this person, but let's do it, right? And then last year, we started looking into every dollar that we spend. For example, we took 3 weeks off without spending any marketing dollar. And then we realized half of the people still come in, right? It means that we didn't do it really well. And it's a good exercise for us to, be ready for the future.
For us, before COVID, we were actually doing a B2B model where we export that technology to other companies to make end products. Work with companies like Sega in Japan, Nintendo, Disneyland. COVID changed all of that. Obviously, lockdown, logistics problem really stopped a lot of B2B sort of transactions. So we decided to pivot into a B2C model where we completely just sell directly to consumers here in Hong Kong. And I mentioned that we manufacture our products here in around the region, like Shenzhen area. And in a sense, yes, Hong Kong's border was closed with China, but there were still limited shipping by land available into Hong Kong. Whereas if we manufactured that overseas, then that would have completely stopped. So that was kind of lucky for us. And also our product also requires the use of like a tablet or iPad to operate. COVID actually accelerated adoption of new technologies in education. And so that kind of helped us, to accelerate this piece of business altogether in the past 2 years. So we all know COVID is, it's behind us, and we're not happy that it actually had happened. But in a sense, I think it helped us at least, to reconsider our business model and find new ways to thrive in the new norm. That's what we did.
Did the geopolitical situation change your decisions at all, or it didn't factor in?
Yeah, well, manufacturing-wise, not really, but market selection-wise, I mean, truth be told, there were a lot of policy shift in the last 2 years, especially in education sector in mainland China. So we're cautiously eyeing the situation and also, considering where we want to expand next. So we're still hopeful that we can slowly explore the 1.4 billion population market with the Chinese education angle. But also we're also putting a little bit more weight to consider nearby region like ASEAN, where there's a huge population with the need to learn Chinese as well.
Yeah, I think in my situation is the geopolitical situation, right, actually pushed us to diversify outside of predominantly a China, Hong Kong market, where we were more focused before. It kind of pushed us to evaluate how to expand globally, because that way we think will mitigate any geopolitical situation in the future, because you don't know where the next crisis is going to be, right? It could be in Europe, could be in US, could be in Southeast Asia. But if we're in all of those markets, then the impact may be less, at least because we're not putting all our eggs in one basket. And how we've done that is actually COVID actually helped, because we diversified through acquisition. And during COVID, it was a buyer's market, right? Lots of people were not doing well. Lots of people wanted to sell quickly, and we capitalized, and we were fortunate enough to acquire some good businesses at attractive prices because of the situation globally, right? So I think it helped us, but now, of course, now that COVID is over, now the pressure is on us to perform and to grow those businesses. But overall, yeah, it's been good.
Yeah, I think that leads, Sheldon has something to say, I know, but just before I let you jump in, I want to ask Jack this follow-on question, because, the Innovation Committee panel talks about financing before, right? But Jack's company is in a position where they're actually, like he said, doing some acquisitions or some investments in the industry. So I just want to ask, like you said, you just made an acquisition, like how are you evaluating that acquisition, and what were some of the challenges by doing that acquisition during COVID and lessons learned from that?
Actually, we did the entire M&A on Teams and Zoom. I did not meet the seller until the very, very end. So it was quite funny that, well, fortunately there was Teams and Zoom, and we can have video conference pretty much every other day with the lawyers, with the accountants, doing all the DD work virtually. So in effect, it actually helped us save a bit of cost as well, because I didn't have to pay my consultants and lawyers to travel to all these places to get data. But on the flip side, as investors, right, I think the audience here or people joining virtually could be wanting to raise capital, or maybe looking to have funds, looking for startups. And for us, we're more of a private type of investor, where we always look at opportunities that are referred to us. But when we do see an opportunity, we always look at the people. You know, ideas, we see a lot of good ideas, good business ideas all the time, but it's about who is running it, who is the vision behind it, and getting to know that person, right? Because they may not be good business people, because they might be just starting out, but they have to realize and have that, you know, acumen and personality that we can trust will take the business to the next level, right? And so that's one key thing. The other key thing is, of course, acknowledging what you need, because of course everyone needs funds, but what are you going to use it for, and how are you going to manage that money, right? If they don't have a very clear plan on that and data behind to show a very clear business model, right? No great idea will be successful in our view.
Yeah. So now, Sheldon, maybe you can jump back in. I want to talk to you guys about raising, because Jack is more of an investor, and these guys have raised capital. But before I let you talk about that, I wanted to just ask you about how the geopolitical or COVID situation changed your business decisions going forward in terms of your business.
It's just more on profitability, focusing on efficiency instead of growth.
Okay. And so let's then talk about the fundraising environment, because like Jack said, everybody's looking for funds, right? Every company, well, not every company, but many companies are. And these guys have some interesting stories to tell about their fundraising experience. So Sheldon, why don't you talk to us about that, and a little bit about fundraising in the different locations that you've been fundraising in.
I think Hong Kong has a great infrastructure, well, Cyberport, Science Park, for starting off a company, right? Angel, seed is very easy in Hong Kong. But compared to other markets, you know, there's a gap between, you know, A to pre-IPO, right? So I've at least spoken to 300 investors in the region, right? We eventually raised the money from a Japanese fund, right? And but something interesting is happening in Hong Kong is that, you know, the Hong Kong Growth Portfolio Fund, which is focusing on, you know, ticket size from 5 to 20 million, right? And I'm very excited to see that, you know, moving forward. And in terms of Cyberport or incubation, you know, Science Park, we got rejected 3 times, right? And then we eventually got into it, and now I have 3 companies inside Cyberport.
Yeah.
Just never give up and keep moving on it, right? Learning from the experience.
So that's a good point, right? I mean, there's a lot of and the previous panel talked about it a little bit, right? There's a lot of support in Hong Kong. But Kendall, what was your experience?
Our company has raised angel and some seed round. I kind of echo Sheldon's assessment of the funding situation in Hong Kong. But I want to add that I think in the previous session, I think was it Ivan? He sort of mentioned that traditionally Hong Kong has been very theme-based in terms of investing, like fintech or biotech. If you're not one of these, then maybe next. So I think the environment has slightly changing with the last 2 policy addresses, with a lot more emphasis on innovation and startup ecosystem breeding. And I do see there's a lot of tangible policies and establishments being put in place for that direction. I'm from Science Park, and Science Park has been a great, you know, ideation funding platform. I'm not advertising for them, but I did experience personally
Francis is in the room.
that from a startup perspective, you're a Canadian startup or someone wanting to explore the market in this region, you know, there are platforms, funding platforms here from the government, like Cyberport Science Park, that lets you test out your product market fit, so to speak, in the region with lower cost, because you can get free office, you can get some startup funding from them. Give it a shot and see if you find product market fit in the region, and then go from there and raise money from either Hong Kong investors or nearby investors. So I think as a jumpstart, it will be a good strategy for startups in general.
So I just have a follow-up question because Jack's here and you guys have a slightly different view. Is like, what are the considerations in terms of raising from a private investor versus a VC or PE?
I think it's different expectation. For example, with VCs, they are not expecting profits in short term. They're more focusing on the value of your shares, right? And then they also really need you to have an exit, whether it's a trade sale, it's a SPAC or IPO, right? Versus when I talk to private investor, the first question will be like, hey, how much am I gonna get next year, right? What's the dividend like? Right. So that is a very different kind of pitch or business, right?
And imagine that people from Canada are coming here to raise money. What would your advice be to them in terms of them being successful?
There are actually a lot of like financial advisors, FA. They're like they'll go out, they have good investor network, and then they'll go actually help you on the data room first from the deck, and then opening doors, because cold call doesn't work with in this game. You really need a good referral, and this FA is one of the option that we can go for.
Anything to add from the private side, Jack?
I think very, Sheldon's probably put it very, very clear. As a private investor, we're very concerned about profitability. And not that we don't want our investments to go public later on, but it's probably not the top of my mind when I look at an investment. Because if you really think about it, how many startups actually go IPO? Like, for real, right? Everybody wants to, right? But not everybody has to, and still be able to run a successful business in their own right, right? From our own experience, we have both private and public businesses that we operate. It's more convenient to me personally to run a private business versus a listed company for multitudes of reasons. And if the goal is to make money, IPO is not the only way. Let's just say, yeah.
So I guess case in point that if startup approaches family office or you, and if they can paint you a picture that the potential acquirer down the road 3 years on would be so and so, that would probably increase the probability of you investing.
Yeah, for sure, for sure. We sometimes invest as a minority stake, more so as more of a return on investment type. If those businesses actually jive or synergize with our actual existing business, definitely we have additional points given because we think they can help us in the future, right? Be it through acquisition or merger or other ways to cooperate, because we can influence them as an investor, right? That will actually help my main business as well.
Yeah, and one of the considerations is also how this investor can help you. For example, we started our Philippines market with a JV with a local company, and they own the banks, they own airline, they own Philip Morris kind of business, and then it's because we can started this kind of partnership because of our investor. Some of the investors are more hands-on to support you, right? They open a lot of doors. Some are just financial, right? They don't even talk to you, maybe once a year to get updates. So there are really two kind of investor that you need to look out.
Okay, well, so we're sort of coming to the end of our time. So maybe you guys can wrap it up by telling everybody, whether they're in Canada or here, about what are your hints and tips and best advice for them to be successful in either manufacturing, sourcing, or trading out here, or distributing and selling, whichever way you want to give your advice.
Right, I can start. I think if we want to sum up our entire 40 minutes of conversation, right, the way I would like to give you a send-off or for the audience is take calculated risks, right? I think why I say that is if you don't take the risk, you'll not succeed, and if you don't try, you won't know. But do it in a calculated way, either be it through contacts or analysis or whatever information you can gather to help you to make those decisions. And with that, know that you may fail. And because a lot of business decisions and business ideas do fail, and acknowledge the fact that it can fail. I think that will help to set the expectations when you start a new business.
From a startup perspective, we made a mistake of wanting to do everything by ourselves. In the very beginning, we, like I said before, went to look for factories knock on their doors and, hey, can you manufacture this for us? Whereas actually, in fact, there's a lot of network here in Hong Kong that you can leverage. And with a little bit of extra cost, you can actually do a lot more in a lot better ways than you spend all the time, precious time as a startup, just all by yourself. And Hong Kong has a great collection of professions from all over the place. You just have to get out here and network as much as you can, join CanCham. Yeah, that's really the way to go in this part of of the world. I mean, Asia is traditionally known as more of a relationship kind of based economy, whereas Hong Kong has a little bit better balance of both relationship and also establishment of systems here. So from a Canadian perspective, I think it's a good balance.
I think networking is especially useful in Asia compared to Canada. Knowing the right people turns everything around, right? So definitely come in here, meet more people, but at the same time, don't avoid tough conversation. If it doesn't work today, it's not going to work 2 years later. So it's rather better to get things straight at the beginning, set out the expectation, and align the interest in long term.
Thank you. And I mean, you kind of said it, Kendall, but what I got from what you guys said was finding the right partner out here is of utmost importance, whether that be on the manufacturing side or when you go in country to try to start your business, right? So so that was my key takeaway from what they said. So how about you guys? Do you have any questions before we wrap it up? Elizabeth?
Much, but I was thinking as you were speaking about one of the worst situations that I had with people coming in from Canada, very experienced business people who came in and we set up their corporate structure and whatever. And before we knew it, they had found somebody in Hong Kong and put them on the bank account. And then I got a call one morning saying, it's very strange, but I can't find this person. And he's not answering his phone, et cetera. And I said, have you checked your bank account? And there was a big gasp. And the wonderful thing about Canadians is we're very friendly, very trusting. But when you go abroad and when you come to Asia, I'm not sure you can be that trusting. You've got to know who you're doing business with. And I find that these people that come on a 5-day trip and want to get everything done, and they have this horrendous long list of to-dos, and then they go home and they disappear. And they think people here are not going to be tempted by money in a bank account. And I think that's the worst thing that I've seen over the years in terms of that.
Wow, that is an amazing lesson to share. Have you? I haven't seen that, but have you guys ever heard stories like that?
Not personally, but I think financial management and risk mitigation, I think is any business owner should know this and not trust anyone anywhere.
Very good point. Cynical, but a good point. Any other questions before we wrap it up? No. What? Okay, then I'm going to thank my panelists, Jack, Kendall, Sheldon. Thank you so much. So these are three business owners that shared their stories with you guys. So I hope you got something out of it. So thank you very much, all of you.
Thank you, Rose, Jack, Kendall, and Sheldon. Please be seated off stage. Next, Cindy Ho, National Chair of the Hong Kong Canada Business Association, have prepared a closing remarks for us. Please enjoy.
Bonjour, 大家好. Thank you for joining us at the 9th Annual Transpacific Entrepreneurial Conference, jointly organized by the Canadian Chamber of Commerce in Hong Kong and the Hong Kong Canada Business Association. I am Cindy Ho, National Chair of HKCBA, and I'm thrilled that you have joined us for this first ever hybrid, both in-person and online event, which has been exciting and unique opportunity to connect with like-minded individuals, startups, and businesses interested in pursuing opportunities in Canada and in Hong Kong. This year's title sponsor, BMO, has organized the theme, Connecting and Expanding Business Footprints. Every journey begins with a single step, and we have embarked on a journey that will lead us to explore and discover new frontiers of entrepreneurship, innovation, and collaboration. Throughout the duration of the two-day conference, we heard from some of the most influential and accomplished entrepreneurs and business leaders from both sides of the Pacific. This conference has been a melting pot of ideas, perspectives, and expertise from diverse industries and backgrounds. Whether you are a seasoned business owner or an aspiring entrepreneur, we hope that you are able to receive insights and opportunities to connect with executives, investors, and businesses from Hong Kong and the Greater Bay Area, explore new business markets, and gain valuable knowledge and insights. We delve into a variety of topics, including developing and maintaining strong relationships between the two sides of the countries, to connecting talent between Canada and Hong Kong. We have also explored challenges businesses are facing and how we can work together to overcome them, namely in terms of trading, sourcing, and manufacturing in China and beyond. Perhaps and most importantly, this conference provided a unique platform for Canadians in Hong Kong and companies interested in pursuing opportunities in Canada to network and connect with potential partners, investors, and customers. We hope you took the chance to engage in meaningful discussions and forge new relationships that could lead to transformative business partnerships and collaborations. During the past few days, I hope that you are able to embrace the spirit of entrepreneurship, creativity, and innovation that is the heart of this conference. Let's make the most of this opportunity to connect, learn, and work together for a brighter, more prosperous future for us all. And I hope that you'll be able to join us later today at the networking cocktail in Hong Kong. I hope you had a productive and rewarding experience during this two-day conference. Thank you so much once again for joining us, and I wish you all a great day. Merci et bonne journée.
This concludes the 9th Transpacific Entrepreneurial Conference. On behalf of both the Canadian Chamber of Commerce in Hong Kong and Hong Kong Canada Business Association, we thank you for your participation. The closing networking cocktail of the conference will be held tonight at 6:30 to 8:30 at Soho House, Sheung Wan. Thank you once again, and see you next year.